Hey YouTube, this is the Robinhood investor. Hope you had a great day of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Home Depot and Walmart because they reported earnings today. Earnings reports means the company reports their performance for the past quarter as well as provide guidance on their future earnings. So Home Depot, Walmart both reported earnings today. Taking a look at Home Depot, ticker symbol HD, currently priced at $238 per share. Past year up 24.87%. Past 5 years up 109%. Scrolling down a bit, current market cap is $255 billion. P ratio is 23 and dividend yield is 2.51%. Scrolling down a bit, so today, since they're reporting earnings, it fell in terms of intraday trading. And in terms of analyst ratings, 65% give it a buy rating, 32% hold, and 3% give it a sell rating. Next is Walmart, ticker symbol WMT. So Walmart is currently priced at $125 per share. Past year, up 24.89%. Past 5 years, up 57.91%. Market cap is $354 billion. P ratio is 24, and dividend yield is 1.72. Walmart is one of those very consistent dividend payers, and I think it's a good, solid, long-term position to hold. Scrolling down a bit, analyst ratings, 73% give it a buy, 21% give it a hold, 6% give it a sell. So in terms of actual earnings per share, Walmart beat by 1 cent. And going back to Home Depot actually, I believe they missed. Yeah, they missed. Actual EPS was $2.08 versus expected was $2.26. And this was because even though their revenue rose, but the earnings dragged because of increased costs due to recent circumstances. So taking a look at the financials, Home Depot, look at the key stats. So stock price is doing really well. And dividends is also a consistent dividend payer. In terms of profitability, it's 10% profit margin. Return on assets, 20%. Now income statement, gross profit is $37.5 billion, which is good to see. Balance sheet, the total cash relative to debt is kind of high, but I think it has enough. For the long term, cash flow is $13 billion for operating cash. Now taking a look at the earnings, you can see that it's trending upwards year over year, both revenue and earnings. But in terms of earnings, this quarter it dragged because of increased expenditure to keep up with what's happening recently. Taking a look at Walmart. Let's look at the key statistics. So you can see that stock price is doing very well too. Annual dividend, very consistent dividend payer. Profitability, it's fairly low, but it's consistent. It's one of those buy and hold long term. Not that volatile, but it's steadily increasing in terms of growth. Management effectiveness, positive. Income statement, you can see the gross profit is $129 billion. Balance sheet, debt is $73 billion. Total cash is 9.5. Cash flow, you can see that's $25 billion. So overall, very solid companies to hold. Now, between the two companies, I personally hold Home Depot. Walmart is one of those very stable positions. It's not. I don't think it's one of those high growth stocks, but it's definitely one of those you would have in your portfolio, and you would have a consistent, steady income. That's all for this video. What are your thoughts on Home Depot and Walmart? Comment down below. Remember to use more links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.